Remember, this is paper trading only. This morning I woke up at 8, woke up pretty early, looking at stocks, looking at stocks to trade on my scanner. Didn't really have anything that I was looking at over the weekend because I didn't watch the markets Friday, I believe. Um, and I didn't look after hours to see what was popping too, and I didn't look over the weekend to see what had popped after hours. So I didn't know what I was gonna come in today to see or to trade, but um, I knew that there's gonna be a slow market. Don't be. I had to remind myself multiple times before the market opened that you don't have to trade every day. And if today you don't see any opportunity, don't trade. So I was looking at a few stocks, but this one ended up being the one that caught my attention. Um, Going back here onto the um, homepage, I'll show you here what I was looking at. I'm gonna go through every step of this trade. Um, so I saw that it was uptrending. Of course, I looked at the yearly chart. But first, I was I looked at the float, and the float was pretty high. The float was 300. I mean 473 million with a that's weird. The float is higher than the outstanding. I didn't notice that. I didn't look at the outstanding. I just saw the float, and that was good enough for me. Um, then I went into the yearly chart to see what it was telling me. Um, in the yearly chart, so I saw that it spiked. Then they dumped a whole bunch of shares, and and it, I guess they dumped some more, but it was above. It stayed above 30, or just above 30. Right here, it went to 29.50, and now it's uptrending today. Um, but it's only up from 30 to, you know, we'll call it 40. And as I'm watching it, I'm like looking at the minute chart. It's already fading. So I'm looking and I'm like, okay, it's not up much from. It's only up 40 bucks, which is about, you know, it's up 40 bucks. I mean, 10 bucks, which is good, but it's not up much from its uh, previous high of 66.70. So I'm thinking to myself, okay, this has a lot of room to jump back up, and I don't want to be shorting um, from right here at 37, and then it jumps up to 60. But I'm thinking to myself, okay, it's a high float, so it's not gonna go up much because it's a high float. But I'm also looking at, I'm like, let me look at the SEC filings, and on the SEC filings, you see the 424B. Click on it. Still got to learn how to read this, but just know they can make up to 1.7 billion dollars on this offering, and it expires on the 9th of June. Uh, so there's not going to be an exact amount of shares. It's just up to a certain amount. And I was also looking at. I had typed in on command F to look at the outstanding shares to see if I can find the accurate outstanding shares, but I couldn't find that for some reason. But then again, I still don't know how to read this shit. You know, I only know a little bit. So I was like, okay, it's whatever. It has a high flow, um, and they have an offering. I can almost guarantee they're gonna dump today. Um, let me see the date on that. That offering was done 513. So this dump here was in March. So they had, I didn't look, but they had to have another offering um somewhere here, because there's no way in hell this shit just dumped like that without an offering, and which I don't see none here. But I'm not going back far enough. Here's one right here in December, and that could have been expired. That can expire like whenever the date is. I don't know. I'm not gonna look through it, but I should. But I still gotta learn before I can actually like try to throw everything I can in there. This is only gonna confuse me. Um, I can't do too much research if it's just gonna confuse me. I need to study the DVD. But so it had an offering, um, had high flow, and it also had, I don't know, but it had a previous the previous history was telling me that it was gonna go down. So I had three in my favor, but one thing that bothered me was the fact that it wasn't up as much compared to its previous high. So I was thinking about shorting him in pre-market, but I'm like, that's not the smartest thing to do. And remember all the times you got burnt. This could be a long. Realistically speaking, not if the float wasn't so high, I would have longed this. And I was like, you know what? I'm gonna wait for the market to open. And when it opened, the market it didn't even go anywhere. It was just hesitating, as if it was like it just wasn't moving. And I'm like, okay, that's a bad sign. It could mean that it wasn't crashing and it wasn't going up. So I'm like, okay, with the high flow, I mean, with it not crashing or spiking, I ain't know what to do. So I'm like, okay, with the high flow, I just gotta go with what I think based off of past history and probability. What's Well, I gotta go with which way I think it's gonna go. So I said, okay, I'm just gonna short 500, which is not a lot. 500 shares at 37 with the risk of right here of 37.20. But I'm like, the way it's moving here from here to here, I'm like, I don't like the way it's moving. It's moving like a fucking low float. And to be honest, just by me looking at Yahoo Finance, that doesn't mean that 470 something million shares is the actual and accurate float. Um, so I had to remind myself that, and I'm like, okay, it's moving like a low float, which is weird. So it's like maybe that's not accurate. The Yahoo Finance is not accurate. So I'm like, okay, I'm short just 500 with a risk of 20 to 30 cents, and I didn't enter a stop limit order because I didn't want to get shot out like that, and then it comes crashing down. So I'm like, okay, I'm just gonna. I entered my short. I got in at 500. I got in with my 500 shares at, um, excuse me, um, 37.07, and I'm like, I'm not gonna do a stop limit order. I'm just gonna execute it myself, and if it goes above, I'm just gonna try to execute it. It might be a squeeze, but I can't. I don't think I should enter a stop limit order because I'm just not 100% sure, which is weird, which is crazy. I should be putting a stop limit order, but I just didn't do it. So after I got in, it pulled back, pulled back, pulled back. I'm like, okay, I was right for shorting. Um, you see the past history, saw the past history, and I was right for shorting. And you see my entry right here, where I shorted 37 at 37.07. Um, and then I made a mistake. During this trade, I'm thinking, okay, I make a lot of mistakes. I'm remembering what my one of my managers at my job, she told me. Stick to your risk to reward. She doesn't know nothing about trading, nothing about trading, but I talked to her about it, even though she doesn't care to listen, or she cares to listen, but I don't think because of her nonchalant face, I don't think she wants to listen or enjoys it. But she's very realistic. She's like a realistic person, logical thinker, and she was like, yo, don't you have us? Don't they tell you when to get out? And I was like, yeah, you want to aim for 2 to 3 risk reward. Um, you want to risk the amount of money that you're risking. You want to aim 3 times that. And I was like, okay. She like had to make it clear to me to aim for my risk to reward ratios. And as I'm watching this, and as I'm watching this go up, I'm like, okay, focus on your risk to reward. What is your risk reward? Okay, when you're up this amount of money, you can get out. From this amount of money to that amount of money. From 2 to 3 risk reward, that's when I need to get out. And I accidentally did my math wrong on this, where I did the math and I accidentally did my math wrong, and I was like 0.50 times 500 equals 250, but I wasn't risking 50 cents a share. I, because I was thinking I was going to get out at 37.50, but I had changed it to 37.30, and I was waiting for me to get up $750 to get out, but then I realized I was wrong, and I corrected my mistake by evaluating my risk to reward. So from 37 to 37.30, that's 30 cents. So I had to do the math. 30 cents risk times the amount of shares I have, 500. Sorry, 30 times 500. I was risking $50, $150 for this trade. So I'm like, okay, 2 to 3 risk reward. When I get up to when I'm profit 300, I need to be getting out. To when I'm at 300 to 300, 450, I need to be getting out. It started dropping. I saw that it could fall some more, so I kind of like let it ride. And um, right here, I was up over $800. So that's a 6 to 1 uh, reward. And I did not get out. And the whole time I was thinking, okay, when you're focused on your risk to reward versus the stock telling you, hey, we're gonna go down, we're gonna go more than what your risk reward is going to go down even more. It's breaking certain levels because at first I was risking off of this level. I was using this level right here. Um, and I'm like, okay, if it breaks past this level, I'm in for some gains. And then it's falling, falling, falling. I'm like, okay, I from what I can see and from um, the past history, this shit can drop a whole lot. So I'm thinking to myself, I'm like, okay, I'm going off of my risk reward is not the smartest thing to do because this shit can go down even more. And I did not cover it here, and I was kind of like beating myself up because it bounced back, and I went from an $800 gain to a $300 gain, and I was just like, what the fuck, or a $400 gain. I was like, what the fuck? I just gave back more than half or half, and I'm like, this could just come back down. Be patient and let it ride. And my biggest thing is how the fuck do I figure out? Okay, let your runners run, and that's my problem. I was trying to figure out how to let my runners run in this trade, and uh, it was running as you can see, but I didn't know where to get out. So uh, I just got out after it broke this level here, and I'm sorry that this is not correct, but I got out uh, at 35.29. I meant to get out at 35.20, but I did a fat finger mistake where I accidentally entered my order at 36.25 when I meant to do it lower, but it's whatever. Um, it was just a 5 cents difference. So my point is, how do you let your winners run? And I remember Grittani saying, when you see it start to consolidate and go sideways, that's where you want to cover into because buyers are loading in at that point. But this stock clearly isn't. It went sideways, but it clearly isn't holding sideways, and it's still falling. So I guess at that point, you gotta leave money on the table. It's okay to leave money on the table, which I'm okay with too, and I did, and I didn't bother trying to get back in or add shares here. And I didn't add shares here because I was like, I'm already making mistakes. Let me not fuck it up. Um, but I think this is a pretty good trade. I give this a 3 to 4 star trade, really a three, simply because I wasn't really sure what to do here, which is okay. But I didn't cover right here, and I didn't cover right here. And if I did cover right here and bought some more over here, or covered right here and just like covered along the way, I would have gave myself a better rating on this trade. But I know I still can improve. I don't care about covering at the exact bottom. That's not what I'm aiming for. But I'll give myself an extra few points if I do cover lower. Um, but as you can see now, for my entry, I got out at 35.30 roughly. Um, it's continuing to drop another dollar. It might drop way more after today or after this video. But I'm happy that I'm grateful that I was at least disciplined enough to um, not trade pre-market, wait for market open. I noticed that it wasn't spiking nor falling. I made my decision. I entered with a smart risk, and I did well there. And then I covered, you know, when it was not when it was time to cover, but I covered, and not looking for the exact bottom. And I'm okay with the uh, the continual downtrend. The only part I fucked up at was right here when I didn't cover, and it bounced up on me when I should have covered. When I was up, when I hit my target goal. But where I need to improve on, knowing when to exit your trade. That's a massive area that I need to improve on. Is exiting my trade when it's time to exit my trade. Exiting when the stock tells me to, and exiting when my risk reward hits. And if I see that it's gonna go beyond my risk reward, I think I need to just exit along the way, or um, exit when I see sideways price action. Thank you.